From Kampala to the world, this is Business Now, your weekly pulse on the people, policies and profits shaping Uganda, Africa and the global commerce. I'm Malcolm Musime, and the show is brought to you by Absa Bank Uganda under the bold new campaign Joga 2025, and it's your turn to meet your dreams. Let's start off with the top global stories. Tonight we begin with the three major stories in business that could ripple across markets and economies. Tensions are escalating in the Gulf as Iran threatens to close the Strait of Hormuz, a move that could disrupt nearly 20% of the world's oil trade. And second, US tech stocks are tumbling after a fresh antitrust warnings from regulations in Washington, raising questions over the future of AI-driven monopolies. And in Africa, the African Continental Free Trade Area hits a milestone as 47 nations agree on unified customs protocols, a potential game changer for intra-Africa trade. Let's now take a look at budget implications on your business. In our top story tonight, an exclusive sit-down with the CEO of Uganda's Federation of Small and Medium Enterprises, John Kakungulu Walugembe. We unpack what the 2025-2026 national budget really means for the backbone of Uganda's economy. From taxes, access to credit, to policy reforms, SMEs are demanding in this country.
Thankfully, government has been very consistent in terms of its priorities over the last few years, and the focus has been on full monetization of the economy, with a focus on agro-based industrialization, with a focus on digital transformation, with a focus on improving service delivery, among others. And then government has also articulated its strategy of growing the size of Ugandan economy to $500 billion by 2040. And the idea there is to prioritize what is now called the ATMs still: agro-based industrialization, tourism development, mineral development, science, technology and innovation. So the budget therefore has looked at these as the core areas from which others can benefit in order to achieve this tenfold growth in the size of the economy. So any private sector actor needs to look at this as a starting point. Agro-industrialization remains key, so agro-processing, adding value to agricultural produce. And agriculture itself, because you can't add value to produce that does not exist. So people should feel bold and confident to invest in agriculture, to invest in value addition, to invest in packaging solutions, to invest in logistics, to invest in exports, among others. Now, when you look at the issue of mineral development and mineral beneficiation, here we must look at the oil and gas sector, which is key for us as a country. We are hopefully about to start the production phase, and this is significantly going to be a key contributor to expanding the size of our economy, the tax revenues, and the opportunities generally in the economy. But we shouldn't be limited to oil and gas alone. There are a range of other minerals that as a country we are either discovered or in the process of discovery, which can give us some good advantages. As you know, in the world now, there's a discussion about rare earth minerals and how those are extremely important when you're talking about the production of certain new technologies, whether it's the mobile phone or it's solar and so on. So as a country, we need to look at where we place ourselves. So government has to borrow, but we are asking government to be responsible in how much they borrow, from whom they borrow, and how they deploy the funds that they borrow. Because now our debt is past 100 trillion, maybe 106 or 110, you know. So this is quite high, you know, and our appetite for borrowing seems to be increasing. We've surpassed the IMF threshold of debt to GDP ratio which is not a big deal because some of these percentages may not necessarily be applicable in our context. But at the same time, government should avoid excessive borrowing that may ultimately lead us to positions of debt distress, or may lead us to being further degraded by credit rating agencies because we are unable to service our debt on time. And as you rightly mentioned, one of the biggest expenditure items in our budget is debt servicing costs.
And then in Bushenyi, we meet a resilient woman tea processor, one of the thousands of smallholder farmers facing plummeting prices and a shrinking market from 600 shillings per kilo to 200 shillings now. We investigate what's driving that slump and what can be done to stabilize Uganda's agri-value chains.
Ndio muhinji ni mpinga majani bagihari siringi rukaga gaza singi bibiri. Abantu amajani bari mu kusomesa abana esente zaburamu basara mukura amajani. Abandi bari sente, abandi bahinga entoke. Nkito twagumantu yangisiriza. Abo gatwara kuriya Mombasa bakatugira ngo akatare kakagwa tikariyo Mombasa. Amajani bagagarura hansari singi bibiri, amisiri yafa, fataliza yabura, no kusasurwe sente na hatintu kibanza. Amezi mingi ago batakatuhire sente mwentu azo mu mberambi aba factory.
Achitaro bundi.
Tiburuha katare. Hariyo butare bundi bwo gwabuni batwara Mombasa, majani gaguzwa hero. Icyamani ne bei kukora takufuna kasente ombwire nkatosanga majani wagatayo nomba okwezi nbatusore 215 na 30. Osanga obure bwi 15 bwahikate bakwa sente. 30 byahika tibakwa sente osanga no obure burengaho. Icyo nicyo kizibu cyo kubanza. Cya kabiri embazi yo kuteka Misiri. Nayo niyo nsonge kukiza y'amajani gafire no sanga iwako no ihakiro ke 12 oyihaho 10 n'ingaro 8 habwe nsonge kujya taroki fataliza ebi nabi bizibe bikuteganse
abunja taroti fataliza kandi ngiyo
kasi fataliza iye eruho iyo gure kabiri eruho konkite twine sente zo kujigura kandi fataliza eri habe yahiguru.
And in our third story, take and data on policy. As data becomes the new currency, the Bank of Uganda is moving to strengthen protections around consumer information. But what do the new pronouncements mean for fintechs, banks, and everyday Ugandans? We dive into the privacy implications and industry response.
So if you're going to consume a service, I think the first point is educate yourself on it. If you look at some of these complaints where the customers are complaining about financial institutions not providing enough care, when you read the print, remember we have even gone, as Bank of Uganda, we have gone to the point of defining the minimum font for these service level agreements so that they are legible. If you buy a SIM card and open a wallet and then choose to share the PIN with your girlfriend because you are in love, I don't think really you have a right to complain. If you share your phone, which has your confidential information, with someone else, and something happens to your account, so you lose something, and you turn around and want to blame the service provider, I think that is mental laziness. And I'm saying this not in a bad way, but I'm just saying it's about time that as we hold service providers, regulators, government, consumer protection associations to account, we also ask ourselves, what are we doing as consumers? Bank of Uganda, for example, has got something called the Financial Consumer Empowerment Guidelines of 2013-2014. It states the obligations of a financial service provider, but there's a whole section on obligations of the consumer. When people file complaints with Bank of Uganda, they only make reference to the part of the obligations of the service provider, never on their obligations on their part. So, to bridge that gap, I think it's about time that perhaps you say we should mandate that consumers prove and indicate that they understand. On the standard loan agreement, I'll give an example. On the standard loan agreement, there is a section that we mandated they include, which says that I have read the terms and conditions of this loan offer, and I have consulted a third party and I agree. Then 6 months down the road, someone turns up and says the terms were unfair. Oh, I didn't know I had to pay that. Okay? So the trust gap can only be plugged by one thing: information. So in response to your key question, information, information, information. That's the solution to plug the trust gap. Thank you.
In our fourth segment tonight on Business Now, as we close with your money and financial markets world, how to navigate Uganda's evolving investment landscape, from treasury bills to government bonds. We break down the yields, risks, and best practice for smart investors like you. So on this edition of Capital Markets here on Business Now, we speak treasury bills and bonds, very, very rare asset classes when you talk about investing long term. And many questions come up on what treasury bills and bonds are for people who are not familiar with how the financial markets work. But then you often hear messages from the central bank that you can invest as low as 100,000 Uganda shillings. Can you compete with people who float over 700 billion or even sometimes 500 billion? Can you compete with financial institutions or even savings clubs or funds that have a lot of money? So then how can you invest 100,000 shillings and expect a good return? But we're going to talk long-term investing, and that's what it's about. Treasury bills and bonds. To understand this is Alex Kakande in the studio, who is going to make us get more information, the financial analyst. You're welcome, Alex.
Thank you
Business
so much,
Now.
Malcolm.
Nice to meet you.
Nice meeting you, Malcolm.
Great. So what are treasury bills and bonds in a basic understanding for someone who is just dreaming to start investing?
Thank you so much, Malcolm, and thank you so much for having me. Treasury bills and treasury bonds, or how they are called, the securities, is basically you lending to the government on an agreed term, which is maybe 90 days, 182 days, or 364 days. Now, if you lend to the government through Bank of Uganda for a period that is less than 1 year, that becomes a treasury bill. Anything that is over 1 year, where the contract of lending to the government through Bank of Uganda, that is 2 years, 3 years, 5 years, and over, that becomes a treasury bond. But it's an investment the same way I can lend you money where we agree on an interest that you're going to pay me back 10% every single year for maybe 2 years for the money or principal I've lent you. It's the same thing when you lend to the government through Bank of Uganda. Say you take on a 2-year bond. It means the government is going to have your money for 2 years. It will be paying you a coupon every 6 months. And after 2 years, when the elapses, they give you back your principal that you lent to them.
It often says this is the safest asset class that you can put your money in, than building or even like buying a cow and start grazing and goats and stuff like that. The safest because you're lending to government. Tell us about the risks first, and how can this guy with very little money that's dreaming to start compete in that space where there's that a layer of risks that are not known?
I know for the people who are listening in, someone who wants to just start and maybe they have 100,000, that's all they have, maybe every single month. Either way, you have to ask yourself, what can I do with 100,000 as I continue to do what I want to do? I'm employed, or I'm self-employed, or I'm a farmer. Every single month I can save 100,000. When you put it in a treasury bill or a treasury bond, depending on your goals and your aspirations, it will grow. At the end of the day, someone who has 10 million and someone who has 1 million, if both of you buy the same bond, you're going to get the same interest rate. The only difference is in the value. So one of the risks that many people get scared of is the default. When I lend money to a person, if someone lends money to Kakande, you risk losing it if I don't pay you back.
A huge domestic debt bill the other day, and it was raising some, hairs a bit. But still, people will get their money.
People will get their money, and that's because of how treasury bonds work.
Yeah.
They self-finance the repayment.
Yeah.
Because right now, I'll give you an example. On May 29th, there was a treasury bond that was maturing, close to over $1 trillion, where they needed you to pay back that principal. So it's not like the government has to first sell some land somewhere. The same way if you lend me and I have to sell something to pay you back, they're going to issue another treasury bond, and then Alex will buy the treasury bond, and the money they have raised, they will use it to pay Malcolm. And that's why you see even in the budget, there is a line item called treasury securities rollovers or redemptions. All they're trying to say is that they self-finance themselves in the repayments, which reduces the risk of you losing your money.
How can someone get to invest in bills and bonds?
It's actually very simple. Right now, you must know or align what your goals are. If you want to invest for less than 1 year, you have plans in 1 year to say, okay, I'm going to do ABC, or maybe buy land, and you have this money here temporarily, buy a treasury bill. If you want your goals and investments are for 2 years, 5 years, 10 years, you align your investment to the bond you buy. It's not blanket that all of us should buy 10-year bonds, 15-year bonds. But if you are still young and you still have little money, I encourage you to go for longer bonds, because that's where you're going to make a little bit of more money. Just walk to your commercial bank, whichever bank you bank with.
Primary dealers.
No, not only
Those
primary dealers.
secondary dealers, yeah.
No, not only primary dealers actually. Any bank, for as long as it's a commercial bank, it can allow you to open up what we call a CSD account. That's the account it's housed in Bank of Uganda. You cannot go directly to Bank of Uganda. The CSD account, it's what you need. When that is opened, fund your account. What I mean fund, deposit money on your account. If you already have that amount, then the third thing which is important, know when to buy. Now, when it comes to treasury bonds and treasury bills, we have two markets. We have the primary market and the secondary market. The primary market for treasury bonds, it's once a month. So if you want to buy from Bank of Uganda directly, you should know when Bank of Uganda is selling. For treasury bills, it's twice a month. So for treasury bills, you know when it should be selling. But sometimes you might have the money right now and you want to invest there and then. You can go to the secondary market. Secondary market means I can buy from any person who has a bond. Majority of the times it's going to be your commercial bank you back with, but sometimes it can even be any other person. And to also expound on the secondary market is that it's not just buying, it's also selling. That if as a person I have $1 million right now and I invest in it, 2 years later I need my 1 million, you can go and sell it on the secondary market. You do not need to wait that if I bought a bond of 10 years, I need to wait for 10 years for me.
The issue of inflation risk, and the interest rate risk.
Yep.
Can you break down for, someone watching right now, who also believes what I believe, that these are the most safe, relatively safe.
Yeah.
Yeah.
I'll start
How
with
does inflation risk apply? And
I'll start with the inflation risk. When you talk about inflation risk, is where you say if I'm investing $1 million, how much value does it lose every single year that passes? If I give you $1 million right now and you can afford to buy anything, does that 1 million, can it afford to buy the same thing a year later? Now, when it comes to treasury bonds, you have to look at it and say, what is the inflation rate in the country, or averagely, what has been the inflation rate? Now, we know, right now in Uganda, in the last 5 years, if I'm to use that way, we have been between 3% to around 6% when it was so high. I know it reached around 8% in mid-2022, but it came back within the 6% and they have maintained it. Now we are within the range of 4 to 5%. The issue can become, if you buy a bond, let's say that is giving you 14% and it's for 5 years, and close to the 3-year mark, inflation reaches 20%. That means the return you are getting is lower than the inflation. At that point, you are losing money. Now, on the interest rate risk of treasury bonds, that affects, it comes out in two positions. There are people who invest in treasury bond when they know they can buy and sell, if you understand the market. The same way you can buy land and say in 2 years I will want to sell it off. The bonds that are already on the market, the bonds that Bank of Uganda has already issued, their prices go down or their value. So that means if at any one point you want to sell, when interest rates are going up, you are going to sell at a loss. However, there is an opportunity in the same exact position. As I talk about interest rate going up, interest rate also can come down. And when you look at the graph of interest rates, they will always go up in a period and they come down in a longer period.
There is someone now holding 500 million shillings. And it's not just the young actually who dream of this. There are people who are holding a lot of money in the market. They perhaps decide to go downtown Chikubo or even build apartments and stuff like that. So you have all these competing asset classes. Which one offers the best balance and safety? Like, where would you wake up and say, let me put my money here, after that I go to the beach?
If I want to go to the beach after I've invested my money, it will be the
buy
Treasury.
a beach house and
No,
live
it
your
will be
life.
Treasury
Come
bonds.
back tomorrow, just use your,
Yeah, it will be Treasury bonds because I'm going to invest once and I know when my money is going to come in, I know what's going to come in, and the return right now is really good and I'm going to do nothing. However, that doesn't mean the bonds earn the most money. But right now, competitively, they are competing with so many asset classes. If you are to look at real estate right now in Uganda and the projections and how it's growing, that if I'm going to construct an apartment and they're going to cost me 500 million, on averagely, an apartment where you're going to spend 500 million, you expect to get an averagely 10% return, which means 50 million every single year. When I have 500 million and I put it in a bond, I'm getting over 70 million and above. So I'm already 20 million over and above. And if I do it for 10 years, I'm earning 20 million over and above you for 10 good years. That's 200 million, over half what you invested. And that is even before compounding. And that's before we factor in what is the cost of repair and everything. But that doesn't mean we are going to invest in bonds forever. Rates right now might be high, they might be competing favorably with real estate. And one time they might go down, what we are seeing maybe in other countries, which we talked about and we might talk about later. But also, it's important for people to say that if I already have apartments that are of $1 billion, now I'm raising my income from them for 50 to 30 million every single year. Do I buy more land to invest in that, or do I diversify into the treasury bonds and I also start getting some money from that? Because we are seeing what you make every single year is competitive enough. We are looking at 17%.
That's it for this edition of Business Now, where insight meets opportunity. Malcolm Sime. Don't forget to catch the repeat on Friday here on NTV Uganda and our NTV YouTube channel. You could subscribe and tell your friends about it, but follow me on X, formerly Twitter, at Malcolm Sime. And that's Business Now, powered by Absa Uganda through the Joga 2025 campaign, helping you take new and next bold steps. It's your turn to meet all your dreams and borrow whatever money you want, from business to school fees to even buying a car. Have a good night.